for taking us through that. So Fortis Health is a stock in focus from the entire hospital space. The other one that we've been tracking closely today is KIMS. They've acquired an additional roughly 7% stake for 148 crores in Sarvejana Healthcare. This is a further stake subscription by KIMS. That stock is also in focus today, not doing all that much. In fact, it has sharply simmered down from the day's high and almost at the day's low right now for KIMS. Nonetheless, a 0.3% uptick coming on that stock. A bunch of other stocks have been in focus over the course of the weekend. Remember, KIMS was in focus last week as well on the back of their expansion in terms of the beds that they were adding to the capacity. So yes, hospitals has been a theme that we have been seeing a lot of buzz from over the last week. We have Mayuresh Joshi joining us on the show from MarketSmith India on the fundamentals. On the technicals, Richard Jain is joining us from Motilal Oswal Financial Services. Let's first come to you and get a sense from you, Mayuresh, on the entire hospital space. Is that a space that you're liking right now? We've heard news from Fortis, from KIMS, Apollo Hospitals has been in the news on and off. What's your take on this space?
Very good afternoon to you. No, I think we remain extremely optimistic on this space. Two or three broad reasons. One, I think the expansion that a lot of these players are doing, both as a mix through the brownfield and the greenfield route, are going to be value accretive, specifically the brownfield investments, because the return on capital employed and the payback is going to be much faster for them. The asset-light model that they are following is also a step in the right direction because it reduces leverage to a large extent. And leverage probably remains quite manageable on a lot of hospital balance sheets. The second element in terms of medical tourism is expected to rise exponentially over the next few years. To top that up, the expectation in terms of domestic healthcare actually improving over the next few years, with organized players probably taking a lion's share as we speak through the mediums and the methodologies that they're probably adopting at this juncture, will leave a larger footprint, both in terms of inpatients, volumes, the kind of therapies that a lot of hospitals are offering at this juncture. Very critical therapies. They've got therapeutic therapies as well, right from oncology to all the critical elements that are probably required, which is going to be a huge help going forward. The third element in terms of the key parameters itself, including average revenue per operating bed for a lot of these players, the average length of stay, the expectations in terms of additions which are now happening. I think the standard is somewhere around 2.5 to 3 crores a bed. That is probably being adhered to as we speak in terms of expansions and capacity additions, which probably will mean that balance sheet growth, as I said, specifically ROCs, should probably continue growing at a healthy pace. So remain extremely optimistic on the sector. The rating rankings look robustly placed. We continue holding stocks like a Fortis, a Max Healthcare in our model portfolios.
Hi, afternoon. What's with the entire defense pack a buzz? It's that year-end push, or do you think there are many tailwinds in place right now?
Afternoon, Aisha. I think it's more to do in terms of a lot of news flow that is coming through. I think there was some element of a tweet where the US might do some exercises with India to probably counter China. We've already got exercises happening with Japan and Australia. And as we speak, in terms of a balance sheet outlay, defense, as we head into the next 2 months and the budget itself, defense should also get a decent share in terms of an uptick from last year's budget as we speak. Having said that, I think a lot of the defense players, Aisha, are already loaded with decent order books. So the revenue visibility of the book-to-bill ratios look reasonably strong as we speak. Margins have been relatively stronger as well. And there will be patches for all these players where a quarter or two execution might not be up to the mark. But over a longer term structural play in terms of how the sector is probably poised, it is probably poised for hyper growth as we speak. And balance sheets will be very, very different on a positive note over the next 5 to 7 years as they expand. So I think more orders coming their way, decent outlay for the sector as well, reasonable margins, better return ratios, better efficiencies kicking in will mean cash flows also remain relatively stronger. So remain optimistic on this space also, but you need to be a little bit selective here because some stocks are really expensive as we speak, some fairly valued going into FY28 numbers.
Okay, so that's a take on the defense space. Ruchit, hi, good afternoon, and thanks for your time today. Give us a chart check on Devyani International. That stock has suddenly, caught my attention. It's doing really well in trade today. Last week it was up 5%. Today up another 6%. But on a year-to-date basis, the stock is low by 25%. How is the chart shaping up for Devyani International? And do you believe now that this stock has started to show some strength, is it a good time to look at this stock right now?
Yeah, hi, very good afternoon. Well, no, the stock has seen a good price-wise correction along with the broader markets over the last 2.5, 3 months. But the momentum readings on the daily as well as weekly charts have gone into some oversold territory. And on the weekly charts, we also saw formation of some no reversal pattern, which generally leads to pullback move when no such pattern gets formed when momentum readings are oversold. So we expect a pullback at least in the near term towards 145, which is the 50-day exponential moving average. So pullback towards 145, 148 cannot be ruled out in the near term. Although this would not change the overall trend, which has been a bit on the negative side, but at least some relief rally can be expected here.
Interesting. Okay, that's what you're seeing right now on Devyani International. But I'm just looking at a Mazgaon dock, which is holding up about almost 5.5% as we speak right now. There's RVNL, a solid 5% of a dash, Solar Industries, MCX, and of course, Nalco, call it the silver effect. That stock has been holding very, very strong indeed. But Richard, if you had to really make a comparison between Hindustan Zinc and Nalco, which are both turning out to be silver plays right now, what's looking stronger and where do you think there is trading opportunity on the upside?
In fact, both have been stronger stocks over last few weeks when the markets had not done well. And we can clearly observe that both the stocks are not even breaching their respective 20-day EMAs, which are short-term moving averages. So I think overall trend remains positive, but in terms of the risk-reward ratio, I think Nalco has still favorable risk-reward ratio over here, as the price up moves have started gaining volumes right now, and the major support for the stock is now around 272, 270. So the downside seems to be limited over there. Hindustan Zinc also, although overall trend is positive, we have already seen a good run-up move over the last few weeks. So that could continue. So if any existing long positions are there bought at lower levels, then they can continue to ride the trend in Zinc. Whereas if one has to buy any fresh positions to ride this metals uptrend, then I think Nalco offers a good risk-reward ratio even at current levels.
Take on some of the stocks, Hindustan Zinc and Nalco to be particular, that have a lot to do when it comes to silver. In fact, for Hindustan Zinc, silver makes up about 30 to 40% of their annual revenue, and the kind of upswing that we're seeing in silver, a fresh high coming in on that precious metal, that's the reason why both of these stocks are in focus as well. But on that note, we'll slip into a very short break, keep the conversation going with both our experts on the other side. On the recently signed and spoken about India-New Zealand FTA. It's in the works. It's going to be signed recently. Mayuresh, we've been signing these FTAs, like my colleague Sumita was mentioning, with the UK. We've done it with Australia and now with New Zealand. But the big one that we're waiting to hear about is the India-US BTA, the bilateral trade agreement. On the back of that, do you believe that the fear that we started the calendar year with the uncertainty around that and the tariffs that came to play in April, from that, do you think the market has now largely put behind that fear, given whatever the consequence could be? The market is largely priced that in?
To a large extent, yes. And I think the market is also pricing in that at some point of time, over the next couple of months, the deal will get concluded. Now, in what aspect, in what proportions, I think that is a large unknown, but the market is sensing that the deal should get concluded over the next few months. And therefore, I think there is a sense of relief. And you would have probably seen that the volatility in the markets has probably gone off to a large extent. So I think the hope and the optimism is that the deal will come through over the next couple of months. And if that happens, probably, I think the underlying of the market, which is a little circumspect as we head into the new year, I think those fears will probably go off and the markets will then start coming back to focusing on earnings which in my opinion, again, should hold out very, very strongly. So again, structurally, I think India seems to be in a better position as far as earnings are concerned, a lot of macro data points. I think the feather in the cap will be if the deal is probably signed, which will give that impetus to the market, which is clearly lacking.
Right, okay, that's the word coming in on the FTA, although it seems that there is already some chatter opposing it from the New Zealand faction.
We have that tweet open. In fact, Aisha, it's Winston Peters, the New Zealand Foreign Affairs Minister, and he's saying that New Zealand first is regrettably opposed to the India Free Trade Agreement announced today. They consider the India-New Zealand FTA to be neither free nor fair. Regrettably, this is a bad deal for New Zealand. It gives too much away, especially on immigration, and getting nothing in return for New Zealanders, including dairy. Now remember, New Zealand is an economy that is largely agrarian in nature. A lot of their GDP comes from agricultural produce, dairy, and the likes on that front. Sporting equipment is another big up for them, but it's also on the back of the wood manufacturing that takes place over there. So largely an agrarian economy, and based on what my colleague Sumita was telling us, the kind of market access that we are blocking away from New Zealand in terms of spices, gems and jewelry, dairy, and a whole lot of other sectors where New Zealand could stand to benefit. I believe that is the reason why we're seeing this tweet coming in from the New Zealand Foreign Affairs Ministry. But yes, we'll see what happens down the road when it comes to this. But it's an interesting development that we're just hearing about from Twitter. But yes, let's shift focus once again to the markets. Ruchit, let's talk about some sectors that have been in focus, and it's the realty group of stocks that has been doing well over the course of the last couple of weeks. Some exuberance returning over there. Any names in particular that stand out to you from the real estate pack?
So if you see the recent corrective phase when the broader markets have corrected, within the real estate basket, Phoenix Mills was one stock which clearly was a relative outperformer compared to the other real estate names. So I think overall trend there remains quite robust, where a high top, high bottom structure technically is still in praise with price up move supported by good volumes. So I think the sector as a whole, the downside seems to be limited from here on post the recent correction. But in terms of stock specific moves, Phoenix is one stock where we are really positive on. And we think that outperformance could continue in that name.
Right, okay, that's the take coming in on realty right now.
Okay, so that's the exclusive story coming in on Bharat Coking Coal IPO. Thank you so much for that. Mayuresh, let's shift focus once again, pivot to the markets and talk about some sectors that are doing well. And it's actually all the sectors are doing really well right now. FMCG, auto, pharma, metal. But given the recent exuberance we've seen in real estate, metal and IT, they've ruled the narrative for the last couple of weeks. Amid this, what is your view on FMCG and auto? They were in focus when the whole GST announcement came in about the GST cuts. But after that, these sectors have not done all that much. Do you believe that impact has already played out, or it's going to take a lot of time from here to play out, and we could to see some significant movement on the charts of some of these names?
No, so for FMCG in particular, I think the rationalization effect in terms of inventory will play out in Q3, and Q4 will see volume uptake coming through, because I think the rationalization only happened at the end of Q2. The elements in terms of better volume growth with prices actually rationalizing and coming down will play out for organized players. Input costs at the same time have remained reasonably benign, and that will lead to better absolute EBITDA and better absolute EBITDA margins for a lot of FMCG players. The second element in terms of the unorganized sector for a whole host of FMCG companies, with rationalization happening, I think they become very, very competitive with the unorganized space. And therefore, I think garnering market share from the unorganized players might be something that can be played out in terms of volumes, pricing, margins, and bottom lines over the next few quarters, to say the least. The third perspective in terms of cash flows already being very strong for FMCG as sector as a whole will continue remaining so. Valuations will remain on the higher side for the sector as a whole. But some stocks are looking attractively placed in our opinion. In the results gone by, our sense is Marico is something that we continue holding. Nestle India among the large caps have given a decent set of numbers in Q2, and if they continue, Q3, Q4 might be equally good for them. And one stock that we are watching out from this space is Tata Consumer Products. Coffee prices obviously a tad bit higher, but they're expected to pass that through as far as their North American operations are concerned, with price hikes expected to take place over the next few months. India Beverages, India Foods should do well. And therefore, I think even the Sampanna portfolio and the new acquisitions that have come through might actually play out positively in margin. So selectively, I think it looks good. For autos, I think generally, I think the demand trends have continued remaining strong. The structural story in terms of positive volume growth should continue for most stocks and most balance sheets within this sector as well. A large part of that has got priced in. There is no two ways about it. And therefore, henceforth, I think it will only be the outliers, stocks which will perform better than what the market probably expects, both in terms of absolute numbers when it comes to volumes, margins, will start performing in terms of relative alpha that they might generate compared to the whole sector. So we remain positive but selective on both the sectors.
Interesting. Mayuresh, curious to know if any of the recent IPOs, considering that was what 2025 was all about, did interest you, or anything that you're looking forward to, particularly in 2026? There's going to be some heavyweight names from NSE to SBI Mutual Fund, Zepto to Boat, Flipkart, Oyo. Strong pipeline for the next year too.
Oh, absolutely. Actually, I think we were looking forward to that. So out of the IPOs, I think a few IPOs were reasonably priced, but I think looking forward for the next year, it all really depends in terms of how the valuation stack up is going to be for each individual IPO. If they leave something on the table, as an example, state SBI Mutual Fund as an example, Flipkart as an example, I think those are new age businesses, specifically businesses like Flipkart, where if the valuations are at the right juncture, at the right valuation in terms of the cap table as well, I think that might draw interest. Apart from that, I think we've been very, very selective when we are probably subscribing or recommending any IPOs at this juncture.
Okay, so that's the take on the exuberance that we're seeing in the primary market right now. But once again, getting stock specific, a stock that's doing very well for itself is KEC International. We were talking about them to pull up the long-term charts of KEC International and see what the stock movement has been over there. Let's see what the 3-month, the 6-month chart has been. Last 1 month, the stock has done pretty okay for itself, a 6.5% uptick coming in, but 3 months, yeah, there you have it, almost a 16% cut coming in. Ruchit, how does KEC International look placed to you on the charts right now? We've seen a blip coming in of about 20% in the last 6 months, but recent recovery in the last 1 or 2 weeks. What does the chart tell you right now? Any upside that you're spotting on this stock?
So in fact, if we see a bit longer term chart, the stock has already been into a corrective phase since last 1 year. I think last year in December, the stock made a high of around 1300. From there, the stock corrected towards 700 up to 700. Now around 700, there's a good long-term support considering its weekly 200 EMA, which has not yet been breached from a longer time frame. And a pullback move with good volumes can be seen today from the support itself. So at least a pullback towards 800, 820, which is the 200 DEMA for the stock, should be expected. So stock is already into an oversold zone, already corrective phase has been done. So and a move towards 800, 820 is what can be expected going ahead.
Interesting. That, of course, is KEC. But once again, Ruchit, wanted to know what is it that you're making of the defense pack? I mean, Mazgaon, MTAR, the entire space is holding up. Any fresh opportunities to trade?
So I think if you look at the recent price volume action, we have seen a good price rate corrective phase in most of the defense names. So an up move could be there in the near term, considering the oversold momentum setups. I think Mazgaon Dock is one where the volumes have increased gradually over last couple of trading sessions along with the price up move. And on the high side, the stock has potential to rally towards 2750, 2800, making the risk reward ratio still favorable. Although up already 5% today, but still I think there is a room towards 2800, 2850 marks. So at current levels, one can go fresh longs as well, with a stop loss below 2400 for potential target towards 2800.
Okay, that's on some of those defense names and Mascot Dock in particular. But the other stock that's doing well today is Varun Beverages on the back of their acquisition of Twiza, which is a soft drink and beverage brand in South Africa. Now remember, this is largely in line with Varun Beverages' aim to expand their African operations. Just a month or so ago, when they had come out with their Q3 calendar year 2025 earnings, they had also spoken about their partnership with Carlsberg for South South Africa, and for Kenya, rather, not South Africa, but it was Kenya that they started with, and now they've acquired a soft drink brand that makes mixers, electrolytes, and a lot of those drinks in South Africa, and that's Twiza. So on the back of this acquisition, the stock is up 3.5%. Just want to see what the long-term chart for this stock is like. On a year-to-date basis, the stock is lower by 25%. Ruchit, on the fundamentals, yes, we've seen some blips coming in on the Indian front, but the international business seems to be picking up well now on the back of this new announcement of this stake purchase. On the charts, how is Varun Beverages shaping up? Do you believe the weakness that we saw in the first half of the year is behind the stock, or is there more pain left?
Well, in this entire calendar year, one thing has been consistent, that whenever the stock is showing a pullback move towards its 200 DMA, we are witnessing selling pressure over there. And today we are closing right around those levels, which is around 490. So I think the signs are positive today, considering that the volumes are better than average in the along with the price up move, but the follow-up action would be important. It would be important for the stock to surpass that 490 mark with such good volumes. Then we can expect a complete reversal of the entire downtrend that we have seen over the last few months, and we can see a rally towards 540, 550 in the short term. So while the stock should be on radar for tomorrow's trading session, could be important, a breakout above 490 can be used as a buying opportunity then.
Okay, so that's on Varun Beverages. About 8 minutes or so for the market to close. Just want to pull up some of the top gainers and losers that we've seen today from the broader end of the market. Yes, it's been the day of Jupiter Wagons. In fact, can we pull up the stock just to see if the stock has touched upper circuit? It has been growing gradually since the day is open, and yes, it's a 20% uptick for Jupiter Wagons right now. Cochin Shipyard, Devyani is up a solid 7%. Good move over there. Cochin Shipyard up 8%. RK Forging, Solar Industries, GE Vernova, TND. Ruchit, any chart check on this one? Do you track this stock on the back of a very important update coming in? There has been news on this stock today, and it's positive for the stock. And in fact, we've had brokerage calls also after it received a mega order for the Khavda South plant, which is between 8,000 and 12,000 crores according to brokerage estimates. Ruchit, do you track the stock on the charts?
Yes, in fact, the mid to long-term trend still seems positive only. What you've seen that when the broader markets have corrected over the last few months, the stock has seen more of a time-wise correction where it consolidated within a range and that too around its all-time high itself. So there is no price-wise selling seen over the last few months. And today it seems that after this entire time-wise corrective phase, if the stock resumes its uptrend, then we could see another leg of up move going ahead. So overall trend still remains positive for GE Vernova. I think already some consolidation has been seen. So maybe next leg of uptrend could start from here on for an potential up move towards 3,400 to 3,500.
Right, interesting. Okay, that's the take coming in on some of the buzzing stocks in trade. But let's also take a look at some of the losers. While, of course, the latter part of this year has been really marked by some of the bottom-up plays, IT clearly being one such case in point. But where else, Richard, do you sense that there could be that catch-up trade which could be at play? Sectorally, thematically, anything that you're spotting in terms of a trend?
So IT definitely, as you said, has been one of the sector where we have seen a good outperformance. I think auto is another sector where we should see a good up move from here on. If you look at positional structure, then during mid-August, September, post the GST rate cut announcement, we did see a good run up for about 2.5 months. Then we witnessed a good consolidation phase, so far in last 2.5, 3 months, which just seems to be a time-wise correction. And now there are chances of a resumption of the broader uptrend. You see stocks such as Maruti, Bajaj Auto, TVS Motors. The structure remains quite bullish over there. So I think auto would be one sector. If one is looking for any sectoral up move, then one can expect good momentum over there.
That's on a couple of those sectors. But Richard, before we let you go, just to get your take on where do you think the market could be tomorrow, given that we have the weekly Nifty expiry, and this week we have back-to-back expiries, given Thursday is a holiday. The monthly Sensex expiry is also there day after tomorrow. Do you believe that the cheer that we've seen on the street today could last for the next couple of 2 days, given that we have these expiries playing out?
I believe it should, because the major factors that were worry for the market for throughout this entire expiry were the FIIs selling and the INR depreciation, which we have seen. But in last 2-3 sessions, both of them have reversed, where the FIIs, we have seen buying figures coming in. INR has at least shown a good pullback move from that 91 mark to 89.5. So I think these factors would lead to some positive moves towards expiry, where some of the short positions would get covered. Also on the Nifty front, we have not seen a breakdown below the 50-day EMA in this entire consolidation of this series. So overall momentum seems to be on the positive side, and going in the expiry, we expect Nifty to head higher towards 26,300, which were the recent swing highs. So the biasness remains positive, and we can expect some range of around 26,250, 26,300 in next couple of sessions itself.
And Ruchit, your quick take on India VIX. We've seen a little bit of a spike yesterday, but it still continues to be under that 10 mark. Is that indicating a fearful sentiment in the market despite the kind of move that we've seen today?
Well, I think VIX also we have seen a quite lower level, compared to past, but there are no signs of worry of such 1 or 2 sessions of pullback. Because if you look at the entire trend for India VIX, then it has remained on the downside or sideways itself. But I don't think just 1 or 2 trading sessions and of any up move towards 11 also, if it comes, then that should be much worry of for the market. So VIX are quite trading still at lower levels. Till it is there about 10.5, 11, one should not think too much into a small bit of bounces over there.
Right, okay, Ruchit, we'll leave it at that. Thanks as always for taking the time out and joining in. Let's quickly